everyone. As you know, my name is Leandra Banks and welcome back. Today's episode is going to be about taxes. It's taking us through a worldwide tour about taxes. As you all know, tax season is upon us, so everybody's going to be getting ready to file their taxes and get their W-2s and so on and so forth. So this segment is going to explain just exactly what W-2s are, why do you need to file taxes, what happens when you don't file taxes. A lot of young people, youth, they know that they have to pay taxes on clothes and food and so on and so forth, but they don't necessarily know why they have to pay taxes, or they don't know why they have to file their taxes when they do get a job. So this segment, this episode is solely focused on taxes, and hopefully you guys will pay attention because this is very, very, very informative information that you can use not only now, but when you get older and when you go off and you want to get a house or you want to get a car or anything like that. This information will be very, very beneficial. So, see you soon.
The history of the income tax. There was briefly an income tax in the Civil War, but as soon as the war was over, Congress repealed it. And then it reenacted it in 1913 in a constitutional amendment. But it was a nominal tax. It wasn't until World War I, a few years later, that the income tax really rose high, partially to pay for the war spending, but also because of Prohibition, which passed at the same time the income tax was raised. Why Prohibition? Well, 2/3 of the federal government revenues came from the whiskey excise tax. Between whiskey and the tariff, that accounted for all the government revenues. We didn't really have other taxes in America. And if you're going to make whiskey illegal, you had to replace it, and they raised the income tax. And they raised it all the way up the top bracket to 70%. Well, after the war, the Republicans took over under Harding and then Coolidge, and they lowered the income tax rate from 70 back down to 25, which unleashed an incredible torrent of economic growth. You've heard of the Roaring '20s? Oh man, they were roaring. The percentage of Americans who owned a car rose from 25% to 75%. Living standards just soared, and that was largely because of the tax cut. Then the Great Depression hit, and government spending rose and government revenues dropped, and Herbert Hoover took over. He raised taxes, raised the top bracket back up to the 70% level and even higher. The Depression was because of that tax increase. Then FDR took over, and he kept taxes at the same level. But then in 1937, he raised taxes, and that caused a whole second depression. And we didn't get out of it until World War II, when we were in a period of prosperity. Now, in World War II, the top tax bracket rose to 91%, and it stayed at 91% throughout the 40s and the 50s. And the result was that we had recession after recession after recession. We had recessions in 53, 55, and 57 under the Eisenhower administration because of the 91% tax bracket. Then Kennedy came in, a Democrat, and he said this tax is ridiculous. We have got to lower it.
Worst deficit comes from a recession. And if we can take the proper action in the proper time, this can be the most important step we could take to prevent another recession. That is the right kind of a tax cut, both for your family budget and the national budget.
And he proposed a 70% tax bracket. And Congress wouldn't pass it, but after his assassination, partially as a tribute to him, Congress passed his signature initiative and cut the tax rate to 70%. There it stayed in the 60s and the 70s. Then Reagan came in 81, and right off the bat, he cut taxes from 70 to 50, and then later from 50 down to 28. And as a result, we had the 80s. We had the boom of the 90s. We had this absolutely incredible economic growth because of that massive cut in taxes that Reagan started with. Then when Bush Sr. came into office, he raised other taxes, but he kept the income tax where it was. But when Clinton came into office, he raised the tax rate from 35 to 40, 39.6. But then he cut the capital gains tax, and the revenues from the capital gains tax balanced the budget and really pulled the economy along. But when Bush came in, he said these tax rates are too high, and he cut the top rate back down to 35, where it stands today.
During that period from 2002 to 2006, the government took in more tax revenue during that period than any time in U.S. history. Why? Because they cut taxes and they let people spend their money. If you cut taxes, you can get more money into the government.
But isn't it interesting throughout this last 100 years how every time you cut taxes, revenues rose and the economy turned on, and every time you raised taxes, the economy fell apart and revenues dropped?
The other thing that happened was 130+ thousand people became millionaires during that time frame. The more millionaires you have, the more taxes you can collect.
Right.
Simple economics. The more taxes you get in, the more you can spend as far as the government. The only issue we had was we was fighting a war. So all that money that was coming into the coffers were coming back out of the coffers because of the Iraq war and then Afghanistan.
My name is Eugene T. Stevenson, Jr. I am the president and CEO of Stevenson's Tax and Mortgage Corporation, and we're located in Hyattsville, Maryland. And we do everything from tax preparation to bookkeeping, anything to help the client out financially and to start them up in their businesses.
Why do people owe the IRS on taxes each year when they take out a lot of money from, our paycheck?
Okay, well, that's a good question, Zane. Most of the time what happens is that we have a form called a W-2 form, and we also have a form called a W-4. Now, on that W-4 form, what happens is that you are to determine how much tax is going to be taken out on your payroll in the beginning when you start out with the company. Okay, so you can take out as many as 10 to 15 exemptions. What happens is that with the exemptions means how much do I want to take out of my paycheck in order to, have the right amount come out and have the correct balance between the federal, the withholdings, and the state withholdings, so I won't owe at the end of the year. What happens is that most people, they base their dependence on their exemptions, and it's not supposed to be that way. So what happens eventually is that if you have 5 kids and you take out 5 of the exemptions, then what happens is that your balance becomes unequal and you tend to owe the federal government. Particularly married couples, they should all be filing 0-0. But some people feel as though because they have a house and other things that they need to claim 5 and 6 and 7. But what happens is you're going to owe the IRS a lot of money. Because it's 2 different things. You have dependents is the number of people in your family that depend off of you. And exemptions on the W-4 is how much do I want to take home in my paycheck.
Those aspects, learn it. I mean, if you have to go outside to learn it, especially coming here to the Katie Abel Foundation, you can pretty much get grounded, get some roots in the ground. So when you do get out of high school, you do get a job, you understand the taxes that are coming out of your paycheck.
Now, is students tax exempt, not required to pay taxes?
No, students are required to pay taxes once they go over the $400 mark.
Okay.
Now, this is very important because when we talk about students, we're talking about 2 different groups. We're talking about the college kids, and we're also talking about high school level kids.
Right.
In terms of the high school level kids, we'll talk about those first. Normally what happens is they get a job at some fast food place or movie theater or something of that nature, and their parents tell them that because you're a kid, you can claim exempt. You're not going to make that much.
Right.
But what happens sometimes is that it's just the opposite of what they're saying. Normally what happens is kids in high school, they may get a half-day schedule. So they may be able to come in and work from 12 to 8 o'clock.
Right.
So they're working 8 hours a day, basically. All right. Then on the weekends, they can work even more hours. They can do 8 more hours. And all of a sudden, when you had exempt on your withholdings, all of a sudden you made $14,000 or $15,000 at the end of the year. You owe about $3,000 federal tax on that. And because of that, now all of a sudden, you're not even out of high school yet, and you're already in debt.
Right.
You already owe the IRS and the state in which you reside in money on taxes because your parents didn't have the financial training to tell you that you had to go and have your withholdings come out at the highest level possible so you wouldn't owe any taxes whatsoever. So that's where the financial literacy piece reaches all the way deep into the family levels, because the parents should advise the kids that they were supposed to have the proper withholdings come out on their taxes.
Right.
So now all of a sudden, they're in debt.
Right.
Now, with the college kids, you're getting into another plateau, because you're going to hit two things here. Now, the college kids are going to file exempt because their parents didn't have any training to tell them that they cannot do that. They're going to owe because they're working also while they're going to school. In addition to that, they're getting student loans and other things to help them out during their college days. But what happens is, during the first, second, third year, and fourth year of school, what happens is, if they were working, they weren't exempt. 9 times out of 10, they owe the federal government and upwards probably of about $20,000 for working about 4 years without having any taxes come out. Then they graduate. Now all of a sudden, you owe the student loans too.
Right.
So now you're already in debt. So your credit is going to be bad because the IRS is going to impose liens on you. The state government's going to impose liens on you. And also, what's going to happen is now your student loans all of a sudden are going to be owed, and you can't pay them. So that messes up your credit report all the way around.
Right.
You can't buy anything. Can't get a credit card, a house, anything. You're destroyed. All because of the simple fact that you didn't have any financial literacy training, and because of that, the whole thing snowballs effect, and it creates a big avalanche in your life, and you can't do anything about it.
Right.
And that's what happens.
Right. Now, if I owed back taxes and I was having trouble meeting my tax obligations, what do I do?
Okay, if you're having problems meeting your tax obligation, what you'll do is you'll simply contact a tax preparer or a tax professional or an accountant, and what they will do is they will arrange with the Internal Revenue Service a payment plan that can be set up to benefit you to pay those back taxes. Now, President Obama created a law that allows you to go up to $50,000 of debt that you owe the IRS with a 6-year payment plan automatically. All right. So in terms of the $50,000, if you had to pay $50,000 back, you have 6 years to pay that back. Okay. That's on anybody across the board. All right. Now, they have a lot of companies out here that claim that if you owe over $10,000 to $50,000, we can help you. Don't listen to anybody that states any of those claims about the quick fixes that they can help you. The only person that can help you is a couple of forms. We can do the installment agreement. We have to do the 433F, that's your financial disclosure. You have to turn all that into the Internal Revenue Service. Then from there, the telephone call that you'll have online with the person, they will determine your monthly payment. Your monthly payment is going to start. You're going to have a $143 cost to start it up. And then from there, you'll work on your payment plan for 6 years. You cannot miss a payment. If you miss a payment, you have to start it all over again. And so you can still pay up to the $50,000 mark. Now, penalties and interest are still going to incur while you are paying this. So that's important to remember that. You're still going to get penalties and interest on all that, because penalties and interest make up most of the terms anyway of what you owe.
Right.
But at the end, once it's all paid, we're going to do what we call an abatement of interest and penalties. That's the 803 form that we're going to file. And then from there, you're going to get the money back for the penalties and interest. But the debt has to be paid first.
I want to talk about the tax changes. What were the differences in the tax changes between 2011 and this year, 2012?
Okay, the major difference in the tax change between 2011 and 2012 was you get a little bit more in the child tax credit, and you get more on the earned income credit. Now, I'm glad that you brought that point up, because what's going to happen, another major factor is going to happen if the Bush tax cuts expire, and that's going to be a tremendous impact on everyone that owns a house that walked away from it or foreclosed on it. Say, for instance, let's give you a prime example. Your house was $300,000. You walked away from the house, okay, and the house had a remaining balance of $150,000. That $150,000 now is going to be given to you on what we call a cancellation of debt. All right. Now, because of that cancellation of debt, what happens is you're going to get a 1099-C in the mail from the mortgage holder. All right. Now, once you get that 1099-C in the mail, what's going to happen is on the Form 982, you're going to write off that $150,000, okay, on the 982. Now, once that 982 goes away, you will not be able to write off that $150,000, because that $150,000 is now income you earn. And now you're going to be taxed on it. All right. So you're going to be taxed on that $150,000. You thought you walked away from that house free, scot-free, but now you owe the IRS taxes on $150,000. So now you're in even a bigger debt, and it's going to be deeper than it was, because what I just told you was that the 982 goes away, and everybody that was walking away living happy and were able to write off that balance that they earned back from their foreclosed property are now going to be destroyed, because a lot of people are already in debt now. And then to walk away from the house because they couldn't afford it, now they walked into a new bill with the Internal Revenue Service that's not going to go away. Now a total deal will have to be worked out with the IRS. Field representative will have to come out. But what's going to happen now is that it's going to be a different kind of worms this time, because now you're dealing with debt that is amassed over twice the limit that was allowed by President Obama's rule.
Sounds crazy. Sounds like a headache.
Yeah.
But yeah.
That's exactly what it is. It's a headache, and financial literacy plays a very important part. One biggest part of financial literacy is taxes, and that's what a lot of people miss.
Right,
It's
but
also,
it's like the whole structure of it.
It's the whole structure of it,
Yeah.
and a lot of it depends on how you treat Uncle Sam.
Now, I recently hear about a lot of commercials that we've helped thousands of people settle on their debts for fractions of the amount owed. Now, is that true?
No, it's not true. Now what generally happens is that these companies that you hear on TV that offer you this service, normally the first thing they get you to do is fill out a 2848, a power of attorney. Now that power of attorney allows that individual to go and represent you before the Internal Revenue Service. What they're going to do is they're going to contact the IRS on your behalf, and what they're going to say is they're going to create a payment plan based off of how much you owe, up to $50,000. And your plan was to pay $400 a month, okay? That's what the IRS established with you and them, but because they represent you, established that with them. They're going to come back to you and say that, okay, your payment plan is going to be $1,000 a month, okay? And so you agree to sign over, then they're going to get your bank account information, and they're going to pay the $400 to the IRS every month, and then the additional $600, they're going to pocket that. You only had to pay the IRS $400. They told you had to pay the IRS $1,000, so they can take $600 and pocket that for their so-called services, which in turn they absolutely did nothing that you couldn't have did. You could have picked up the telephone and called 1-800-829-1040, created your own payment plan and your installment agreement yourself, and handled that information. You have the opportunity, because it may be $150,000 you owe, you have the opportunity to offer the IRS. You can offer them anything you want, basically, on this. But something within reason. People in the past have the ability to pay but refuse to pay. So the IRS just refused to do the offer, and you still owe the same amount of money. And you yourself, as a taxpayer, can do all of this yourself. You don't necessarily need a professional to help you with any of this stuff if you just read, study, and go to irs.gov. The IRS scares a lot of folks.
Yeah.
Yeah, it's a scary situation, particularly if you get audited and things of that nature.
So in closing, is there any additional advice or words you would like to share?
Yeah, my number one advice to folks out there is to do this. Number one is to make sure you have the proper withholdings. Make sure, if at all possible, claim 0-0 on your withholdings. Because once you claim 1 and 1, you're more than likely going to owe the IRS. If you're a married couple out there, regardless of whether you have a house or anything, you better make sure that you claim 0-0 so they can take out the most taxes as possible. What happens is that you get a big substantial refund in April. To me, it's better to have the money come all out as much as possible, because it gives the power of that check that comes in April can let you do a whole lot of things throughout the year.
You heard it here first.
I think the taxes are important because it allows everybody who lives in the community to have access to a lot of the same things.
Fairness in the tax system, which is going to make everyone want to participate in the process and to receive the services that we all receive.
This morning, as I was driving to work, I pulled out of the garage and I noticed that the city was doing some street cleaning. I said, you know, these are my tax dollars at work.
The poor shouldn't get hit harder when they have to, pay their bills and support their families, and they're already struggling to do so. And the rich get tax breaks, and that's not fair.
Hello, I'm Carmen Johnson, the founder of the Katie Abel Foundation, and here we teach about household budgeting. And in that household budget, we talk a lot about filing taxes and, paying taxes and things of that nature. It's very important that people file their taxes every year, even if they don't owe money. It's very important that you file your taxes, and so you won't have any problems with IRS. And a lot of our members, they work with our CPA, who's also a member of the Katie Abel Foundation, and he's also an arbitrator for IRS. So we have a very good relationship with IRS. So if you're a member of the Katie Abel Foundation and you're having tax problems, we make sure you get the best results possible with that. And just remember, if you're trying to get a house in the future, you need to file your taxes. If you're starting a small business, you need to file your taxes. If you have a small business, you need to file your taxes. Everybody needs to file taxes. Even if you're getting Social Security and you're not making any money, you still have to file. You owe money either to the state or to the federal, and you have not paid, then they put it in public record. Usually that happens if someone hadn't paid or filed taxes for a while, then they'll put an estimate on public record. And then of course you have the opportunity to fix that situation by filing the missing tax returns. That's why it's good to have a CPA or a tax preparer that knows exactly what they're doing.
gotta go file my taxes this weekend. I forgot. I gotta file my own tax. Hey guys, welcome back. I was just sitting here saying that I have to file my own taxes this weekend, and it completely slipped my mind. So I'll be up there at that office for about 2 or 3 hours this weekend on a Saturday. But I gotta do what I have to do. But I hope you all enjoyed today's episode. I know it was very beneficial for me, and I know it was very informative for you all. So I hope you gained something from it. And don't forget to check us out on Facebook and like us on Twitter at Katie Able. Until next time.